the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning into Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take a look at how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of how we started. Well, Singapore shares began the day trading in the green as markets abroad logged mixed results. In early trade, the Straits Times Index was up 0.5% at 3,880 points after some 52.5 million securities changed hands in the broader market. Now let's take you through the closing numbers. The STI closed in the green as well, up 0.36% at 3,874 points. In terms of value turnover, we are looking at 1.48 billion Sing dollars. Gainers outnumbered losers, 347 versus 186. Top advances for today, let's take you through them. We've got here GMHUSD, ASUS and Southern Alliance. And top decliners, we've got here SGX, New Incorporation USD, and Jardine Cycle and Carriage. In terms of counters to watch for today, we have for you the local bourse, SGX. Given how total securities market turnover value on the Singapore Exchange increased 1% year-on-year to 20.8 billion Sing dollars in January. Now, elsewhere from U.S. Federal Reserve Chair Jerome Powell's testimony to Congress to how Alibaba Group Holding's shares surged as much as 8.6% after a news report said it is working with Apple to roll out AI features in China. We've got you more international and corporate headlines. And joining me on the line today is Too Jun Cheong, Assistant Dealing Manager at Moomoo Singapore. Jun Cheong, welcome.
Hello, Tian Tian. Thanks for having me here again.
Great to have you join us. And Jun Cheong, let's start with a region today instead of Singapore. So investors in Asia, they appear to brush aside a warning from Fed Chair Jerome Powell that the central bank need not be in a hurry to cut interest rates again. Now, Powell said this in his semi-annual testimony to the Congress, but how far have investors priced this in given Asian market movements today?
So for the Asian markets movement today, I'll start with the Singapore Straits Times Index. They closed slightly in the green today, paring the losses from the afternoon to close with a gain of 0.36%. Over in Hong Kong, the Hang Seng Index, it rose sharply to close with a gain of 2.64%. And to round up, the Japan's Nikkei 225 closed at 0.42%. So for many of Mr. Jerome Powell's warning, it has already been priced into the market. But for last night, we did see that the U.S. 10-year Treasury bond yield, it went up about 0.86% to close at 4.539 points. So from the Fed Watch tool that we are seeing the possibility of possible first rate cut only in June of 2025. And that possibility is actually hovering at about a 41% range. So ever since we did have U.S. President Donald Trump being confirmed as the 47th President of the United States, investors worldwide, they have braced for inflation to stay stickier, as many of his policies are inflationary in nature. And so far, he has been true to his words with tariffs on Canada, Mexico, and China. So the reaction in the market is less stark compared to, I would say, end of 2024. However, I believe that more data points will be needed for both investors as well as the U.S. Federal Reserve to confirm that the inflation will stay higher for longer and for him to not cut any rates anytime soon.
Now let's go back to the Singapore stock market as usual, Jun Cheong. How did the STI fare today, and any surprises when it comes down to the biggest movers and of course the sectors that they lie in?
So for the Singapore Straits Times Index, after hitting the new high on Monday's trading session, the STI has been trading between the 38.55 mark and the 38.65 range from the whole afternoon before breaking out to close at the 38.74 point. The biggest gainers today will be Seatrium, climbing over 6%, and it also reached a 52-week high for the firm itself. However, I think investors of the STI, they will likely be awaiting for the next two Wednesdays, starting from today, which is the 19th and the 26th of February, because this will be the earnings announcements for both UOB and OCBC Bank. So the trio of local banks, they constitute over 40% of the STI. And with the recent performance of DBS, investors are looking that it will be mirrored by both OCBC and UOB. So while market participants, they are waiting for this announcement, the losers today is primarily in one sector, which is the S-REIT market. So, of course, we spoke about the Fed previously, and this higher for longest interest rate environment will certainly hurt a lot of Singapore REITs. And the latest one, I guess, will be Paragon REIT that's looking to privatize themselves.
Okay. Now, from REITs, Jun Cheong, let's have a look at the local bourse itself, the SGX, because the total securities market turnover value on the SGX, if we look at that, that increased 1% year on year to 20.8 billion Sing dollars in January, with the STI hitting a 17-year high and exchange-traded funds asset under management rising to a record level as well. Now, that being said, if we look at the January's total market turnover volume was down 31% to 19.1 billion shares. How would you assess the performance of the local bourse then?
That's a very great point by you, Tian Tian. So if we were to just look at trading volumes for January to April 2024, it was really significantly higher than what it has been usually been. And it's very likely that for the next few months, we will see that the year-on-year changes it will be falling because when we compare it to 2024. Because 2024, we did see a really high volume trades for between January and April. So yes, while the market's participants, in terms of volume, it's lower, the STI did breach the new high on Monday, and the total returns for 2024 as a whole was comparable even to the US markets. So many are discussing that the 2024 results for the STI is likely to be a one-off thing. However, with a lot of geopolitical instability coupled with the fact that US President Donald Trump's policy, Singapore and the Singapore market may stand out in 2025 and towards 2026 because of what Singapore is great at, which is stability. So other things that we're really good at is we have the Tuas Port coefficients, shipping, the construction of T5 in Changi, a robust financial hub. So really outside of a black swan event, it's probable that the Singapore market will continue to do well come 2025.
I see. Well, another counter to watch, let's take a look at a sector that we love right here in Singapore, property, that is. Now, the counter to watch for today, Jun Cheong, is Wing Tai Holdings. The property and retail firm's net profit continued its decline in the first half of 2025 fiscal year due to lower contributions from its property assets. And that is after selling one of its condominium projects. Now, all in, how significant is this for the firm if we look at its counter movements for today?
So share price for Wing Tai really remains not much changes today, with volumes even staying pretty even throughout the whole year so far. The volume today is traded about 50,000-ish. And the net profit for Wing Tai, it fell for 51% for the first half. And this is also the second consecutive year of a net profit falling for the first half for the company itself. I guess for Wing Tai shareholders, they may want to see that the developers come up with more projects that can bring in higher net revenue for the firm itself. Because from the property market sector in Singapore, we are seeing that the private property prices continue to climb, and for Q4 of 2024, it climbed over 2.3%. And this is important because the latest announcements by HDB, which they came up with this standard, plus, and prime categorization, private properties may stand out to a benefit in the long run, because for the plus and prime properties, a lot of restrictions are set on them. So potential buyers that are looking to buy into such properties may not be able to enter into this market, whereas they have to look into private properties. So this is where, I guess, for Wing Tai, a lot of shareholders, they will really want to look out for what Wing Tai Holdings, their next project may be, and how profitable it will be for them.
Now, if you're just tuning in, we're now in conversation with Too Jun Cheong, Assistant Dealing Manager from Moomoo Singapore. Well, across the region, Jun Cheong, let's take a look at Alibaba Group Holdings stock. That surged as much as 8.6% after the information reported that Apple is working with the e-commerce pioneer to roll out AI features in China. Now, if we look at movements in Hong Kong today, the news also sent rival Baidu down almost 3%. How far do you think that optimism with Alibaba, though, is justified?
So Baba shareholders should be rejoicing with many great news coming out from the firm in 2025. So starting from the Tong Yi Qian Wen, or the Q1 AI, which really became widely known after the launch of the DeepSeek AI, to the current tied-up with Apple to develop the artificial intelligence features for iPhones. So according to various sources, the Apple iOS still has about a market share of over 20% in China.
Wow.
And this is despite the rise of many Android competitors in China itself. So your likes of Poco, your likes of a lot of different Chinese firms. So this huge wave of users would, about 20%, this huge wave of users will automatically translate that to that many users that will be using this new AI feature that will be rolled out by Alibaba. So share price-wise, fundamentally, this is great news for Alibaba to be tied up with one of the largest company in the world, of course, also by market cap. And at the same time, there are also many positive news coming out of China for the Chinese equities markets, such as right now we see the proposal by Chinese authorities looking to help fund a gap of 50 billion yuan to China Vanke. So I guess together with great news from the Chinese government side, and as well as the whole tied up with Apple, I would say this is great timing. So the optimism for Baba is rather justified. And investors for Baba will be eagerly waiting to see the launch of the product.
Okay. Now let's stay in Asia, Jun Cheong, and here's a fun one. Let's take some time with this. Warner Brothers has agreed to develop a Harry Potter studio tour in Shanghai with Jinjiang International. How significant do you think this partnership will be for Warner Brothers, given how this would mark its third Harry Potter studio tour worldwide after sites in London and Tokyo?
So yeah, after the Harry Potter studio tour sites in both London and recently in Tokyo, Warner Brothers did decide to go into Shanghai to tie up with Jinjiang International. So Harry Potter is vastly popular in China.
Yeah.
So in late last year, the film Harry Potter and the Sorcerer's Stone actually took second place at the mainland China box office, which eventually it led up to the re-release of the full Harry Potter franchise in China. So all in all, in total, the re-release will be played in about 3,400 theaters, and that will be across about 295 cities in China itself. So this is huge for China because this whole Harry Potter fame and hype within it, it's bringing to allow Warner Brothers to actually bring in this Harry Potter studio into it. So for Warner Brothers itself, this new studio also at the same time came at the right time for them because first is of course the popularity of the whole Harry Potter franchise in the country, and second because right now there's this economic headwinds that China is facing. There's a lot of lack of domestic consumption. So this is where Beijing is actually looking to boost up domestic demand. And at the same time, the headwinds that China is facing is getting worsened, possibly with the U.S. President Donald Trump's trade tariffs that he has already imposed on China itself. So for Beijing itself, as they are looking to boost domestic demand, they may be pumping more funds into the domestic market itself. And at the same time, Warner Bros., which will be entering this market to set up this Harry Potter studio, they can actually tap into this to boost up domestic demand at the same time.
I see. And finally, before we let you go, Jun Cheong, all eyes are on the latest consumer and thereafter the producer price index due out of the U.S. later this week, tonight and tomorrow night, I believe. The core consumer price index is seen rising 0.3% in January from December. And according to a median forecast in a Bloomberg survey, core CPI likely increased by 3.1% on the year. How aligned are you with this, and what implications will this have on the U.S. Federal Reserve and U.S. equities?
Right. So tonight and tomorrow there will be a lot of inflation data reports.
Yeah.
So consensus of these readings are likely to be as forecasted. Whereas I do believe that the next month reading is poised to be more volatile. So with the inauguration of U.S. President Donald Trump on 20th January, with such a short time frame, not much could have been done in terms of this kind of readings for it. So U.S. Federal Reserve Chairman Mr. Jerome Powell has repeatedly mentioned that he will definitely look at more data points before making any decision. And the CPI reading is one that the team, so at the Federal Reserve, they look at very closely. So this CPI reading that will come out tonight and also for PPI tomorrow, it will bring about volatility to the markets for sure. So this includes the, of course, U.S. equities, it includes your indices, your prices of gold, your prices of crude oil currencies, and of course the yield as well. So all in all, for the U.S. markets, a lot of investors, a lot of traders, they are definitely going to be watching out for this the whole report tonight. Yeah. And for Singapore itself, the Singapore STI, which consists of many interest rate sensitive sectors, will also react accordingly to the CPI's reading. So tomorrow morning we'll be seeing if there's any result come up from it. Yes, so traders who hold short-term position, they may want to hedge their positions before such announcements, and long-term investors, they may look into such volatile times to take it as an opportunity to enter the market.
Lots to watch indeed, as always. Never a boring day in the markets. Thanks so much, Jun Cheong. That was Too Jun Cheong, Assistant Dealing Manager from Moomoo Singapore. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.